Hello and welcome to this week's edition of Mortgage Watch for April 11th, 2008. Do you know how after Christmas there are huge sales beginning in January? Some people just wait till after the Christmas and Hanukkah and Kwanzaa season are over and they go to the store and there's huge discounts and they're selling everything that they can. Well, guess what? There's an after Christmas sale in Washington this week. The White House made a surprise announcement that they're looking to expand the FHA Secure program. So it seems that for all the homeowners who've been waiting for help, it's the post-Christmas sale now. And this White House plan is supposed to help about 500,000 homeowners. It is through the FHA. And the plan is that lenders will mark down the value of their mortgages, and then the government will step in, and the FHA, and provide an FHA loan once the lenders have discounted their mortgage. So an example is, let's say a loan was worth $110,000. It was 100% loan to value, and the value of the house was $110,000. And now the loan and the house are worth $100,000. Well, the lender will mark down their loan to either 90 or 97%, and then the FHA will step in and insure that and basically take over the loan. So the lender's going to take a 10% hit, or maybe a 3% hit, or maybe a 20% hit, but they won't lose any more than that, and this thing will be off their books and they'll be able to move on. Interesting plan. Only one problem is that FHA is kind of going to run into trouble here because of all the rising defaults and so on. The FHA is having some liability and funding problems of its own. So it still all depends on Congress funding this FHA Secure bill. Someone asked me, not the FHA Secure, but the modernization bill. Someone asked me earlier this week how that was going, and amidst everything that's going on, it's still floundering its way through Congress. Again, as we had said earlier, these things take a long time to be done. So there is no FHA modernization bill, and people are throwing out ideas, but nothing is really concrete at this point. The White House's plan does compete with a plan in Congress that would provide around $300 to $400 billion to help refinance loans. And that thing has to be worked out, but most likely that's going to be the winner. I don't think that lenders at this point are willing to just write down their mortgages by 3 to 20%, unless it's the absolute last thing that they are going to do with that mortgage. Unfortunately, mortgage delinquencies continue to rise nationwide. But an interesting study that was done showed that one of the main reasons right now is unemployment and the rising unemployment level and the home price declines that are going on. As we had spoken earlier, the recession is real for all the people out in the field, people who are working and so on. They know that it's really, really tough right now and that sales are down on lots of different items. Rising interest rates are not that much to blame because with the major indices being fairly low, subprime mortgages have not gone up that much. Of course, the people whose loans reset 6 and 8 months ago or 3 or 4 months ago are still in trouble because they ended up going up to 9, 10, 11%, and those things have not really come back down yet. They go down at about 0.5% a year or 1% a year. So it's going to be a long time before they see the rate relief from there. Fannie Mae announced that they were going to loosen their short sale rules. And that basically means that when a house is in trouble and the owners want to sell and the house is worth less than the mortgage, they can invoke a short sale, meaning that there'll be a short payoff of the existing mortgage. Well, Fannie Mae has decided to really streamline that, and that's really going to help. As a lot of you know, Fannie Mae owns or services a lot of the loans in the United States, is involved in the packaging of it. So when they get involved, it's going to speed the process along of moving loans out. And again, it's all sad news for the people in foreclosure, but it's good news for buyers, and that's what we need, is a new wave of buyers to come in and buy homes. We spoke about the bills in front of Congress also to help home builders and homeowners, people who are buying homes that were in foreclosure. So again, hopefully the housing market will get sparked here and take off. Washington Mutual Bank decided this week that it's better to be diluted than to be chased. And for those of you who don't know what I mean, they did get a $7 billion cash infusion from a huge hedge fund called TPG, Texas Pacific Group. They had been considering being taken over by JP Morgan Chase, but they couldn't really work out a deal, even though it seems that Chase is everyone's favorite bank because they have remained relatively untouched by the problems so far, although you never know what's lurking in the woodwork. They did do a lot of subprime loans, so we'll just see how that goes. But Washington Mutual decided they didn't want to become a part of Chase and that they'd rather get the $7 billion cash infusion. When I talked about being diluted, when a company brings in that much money, they basically are printing new shares of stock. So whoever owns shares in the company right now, the value of that has just plummeted. So we'll see where that goes. An important thing to remember is that Washington Mutual is a depository. They're not a Wall Street investment bank. So in the end, they have depositors' money to make loans. Of course, if the loans they made are going bad, that's not going to help them. And that's why the government was really leaning on them to get more money into the bank to help deal with the issues that are coming up. Washington Mutual did a huge amount of subprime loans through their subsidiary Long Beach Bank. They also, through their predecessor banks, basically are the ones who originated option arm loans, which are the next wave of problems that are starting to hit for all the A-paper borrowers and All-Day and so on, who got option arm loans that are resetting right now and could cause some problems for homeowners. Interestingly enough, this week also, the International Monetary Fund did a study, and they said that inflation and the subprime securities problems have cost the world economy $1 trillion. Now that's a heck of a lot of research to do about the world economy. But the question that I had is, well, where does this money go? It's one thing if someone we know lost $10,000 or they misplaced some cash or something like that. That money's gone. But when we say that it's cost the world $1 trillion, what does that really mean? It seems to me that a lot of what's going on with the economy, ups and downs, is really based on paper, the securities. When people say they've lost their value, no one wants to buy them. And the psychology of Wall Street, because investors aren't buying any of these loans or loan products. And if they're worried, they won't buy. If they won't buy, there's no outlet for these loans. As we talk, it's just basically the whole process has come kind of to a screeching halt. All these moves from the Federal Reserve and from the Congress and everything else is to get the trust factor back into the economy. And as I talked about, to kind of just give some anti-anxiety medication out there, that things calm down and go back to working the way they were designed. Well, the thing is this, if it's all built on paper and psychology, which it kind of is, because no one can say where that $1 trillion is gone. It's not like we can say, well, we buried it at the bottom of the ocean, it's jettisoned into space. Where did that money go? See, all this is based on paper, again, the securities and psychology. People's worries about the economy, about the recession, about Wall Street investment companies no longer willing to buy and just standing on the sidelines. So in summing up, I just want to remind everyone, if it's built on paper and psychology, it's really critical for all of us to stay positive, because if psychology controls a lot of this, it's a lot better to be in a good mindset than a bad mindset. So let's remember to stay positive through all this. If you're a homeowner, if you're someone who's considering buying, even if you're having some issues, stay positive. Communicate with the people who can help you, whether that's your lender, servicer, or if you're in the market to refi or buy a home, a mortgage banker, broker, or realtor. Stay positive, and in quoting an old song that I wanted to just remind everybody of, keep on the sunny side of life. So with that, I wish you all a good week. Hope you're able to stay on the sunny side of life, and we'll see you next week for our Mortgage Watch update. Thanks very much. Bye.